Welcome to today's webinar. Today, I'm going to cover all of the host plan tax planning capabilities. My name is Eric, and we're going to go through this pretty quickly. But mostly host plan's known for tax planning. This would be a specialized financial planning software. So we do some things really well and we go really deep, but it's not a full financial planning software. It often complements other tools. And today I'm just going to focus on the tax capabilities. So we're going to jump right in. The first thing you see when you log into ListPlan is mostly the training resources. There's a lot of sessions that we do every week. There's on-demand sessions, and then we also have articles and videos for support. To make our tax planning system work, it works best if you upload a tax return. You can technically do some tax planning in here just by keying in numbers yourself, but almost everybody starts with a tax return first. So you would punch in name, date of birth, and state for the people in that household, and then you would upload at least one recent tax return. So I'm actually going to click into a specific household, and we'll go through all of the tax planning functionality that we can see in here. So if I upload a return, we're going to do what's called optical character recognition. So it reads all of the characters from every box on that tax return. So it's combing through the schedules, all the forms that are attached. It doesn't matter if it has extra pages, but it would matter if it was missing pages. And then behind the scenes, what's happening is we're checking the math for the characters that we read. So if each box adds up to the next box the exact way that it should, it'll pass in our system automatically. If it fails that math check for any reason, it goes to a manual review team. And then our team is looking at those and trying to understand if we read it incorrectly, or if there are pages missing, if there's some kind of issue that we can identify. And then they will key in the numbers if they can, but most cases pass automatically. So you can see that just took about 1 minute for it to pass automatically. And now that it's done, I've got the scanned document, I've got my automatic summary report, and then with scenario analysis, we can do modeling and projections. I'll also be covering some of the other things you can see in our tax planning section today. So first, let's look at the original. This is the tax return that was scanned already. We're going to create a replica of all the scanned information. We aren't reading the sensitive fields, so you'll notice that social and home address don't make it to the replica. Also for name, we're actually not reading name off the tax return itself. We'll use whatever name you provide. So if I said this was Superman, then in our system, it's Superman. We don't actually read name off of the original tax return itself, but from a practical perspective, yeah, most people put their clients' names in. It's just important that we are protecting the private information. So this is how we scan information and extract it from the tax return. This was all just pulled just now. And then our automatic summary tax report just makes it easier to digest that information. Again, this was just generated in about 60 seconds. It's going to summarize the whole tax return that I uploaded. It can be white labeled and can be customized to a large degree. Usually it's about 10 pages to break down the tax return. And there's some auto formatting that's happening depending on what types of income and what taxes, what schedules they actually have. So the majority of this report is summary. And then at the bottom of these reports, it'll have an automatic list of observations where it's going to call out, here's the top 20 opportunities for you based on this tax return that you uploaded. So I'm going to scroll slowly through this report just so you can see more of it. But we've got key figures at the top. We've got a breakdown of the federal income taxes, the marginal brackets for ordinary income, showing how much income and how much tax we have in each bracket. Same thing for capital gains, showing how much income and how much tax we have in each bracket. And then Medicare, technically not a tax, but it is income related. So we're showing how much income we have and where we land for those Medicare premium increases, the IRMA surcharge. So 2024 income would affect our 2026 premiums. Schedule A, we'll do Schedule A through Schedule E. We'll show some summary charts. So this one's good for itemizations. And then investment income on Schedule B and Schedule D. I can also note carry forward losses and depreciation recapture, those unique capital gains. This one will take our investment income and it's just pointing out how efficient it was. So any of the dark blue investment income is taxed at ordinary income rates. And then we've got pass-through business income and some phase outs related to modified AGI. There's a lot of different definitions for modified AGI. So what's happening is we're showing, here's your income based on that formula. And I can see if our income is above or under the limit for the various opportunities. There's way more phase outs for 2025 with the Big Beautiful Bill updates, which we do have in the system. And then after deductions and credits, which is kind of self-explanatory, we've got these automatic observations. So the observations are what make this really easy. When I'm talking to financial advisors, what they like about this report is that it just kind of explains how taxes work. It shows where all the income is and business interests and whatnot. And then it automatically creates a list of these tax planning opportunities. So there's a few hundred of these that we can generate, and it's like an automatic checklist of whatever is relevant based on that tax return. What tax professionals like about this, the visuals are nice. It's a clear story of what's happening, but it also really speeds up the time it takes to do good tax planning. It's just a really time-consuming activity, so this makes the speed to get to those ideas a lot faster. And then the part two of this that I'll show in a minute will be the modeling where you can project some of those ideas and show the real impact for 2025. I'll highlight that you can reprioritize, you can hide things on this report, you can edit. Our language is always going to be really soft because they're observations, so it's not giving a direct recommendation. It's more like targeted education, where it's showing, you could think about this, this, and this, these opportunities that you have. So I'll actually scroll up again, but it talks about capital gains, it talks about Roth conversions, it talks about business retirement plans, it talks about charitable strategies. We didn't have an HSA, vehicle business deductions, the ACA, Obamacare premium tax credit, talks about a lot of different stuff. And then at the state level, it'll also give you a state tax hints for any of the states that have state income taxes. So this is the easiest, lowest lift part of what we do. And then scenario analysis is a little bit different. This functions more like an Excel spreadsheet where you can calculate taxes. So column 1 is the tax return that I uploaded, and all of the data is pre-filled from the OCR. So I didn't type anything in. It's just, here's what was on the 2024 tax return. And now that I have some data in the system, it's really easy to copy everything from last year and then use that to start doing projections for 2025. So this is one of the easiest things people do. We call this the SALY analysis, but it's just the same as last year, SALY. So if you changed nothing except for the tax year, what would the tax bill be? So just changing the year is all I need to do to get the updated brackets and the updated standard deduction and whatnot. I can show the delta, the difference between scenarios to make it really obvious what's changing from a tax perspective. And I promise I will go slower, but I just wanted to show the difference in total tax. And we'll go back up, we'll start doing some other analysis. So super easy to copy and iterate. The warnings that I'm getting are our way of telling you certain things probably need to be reviewed. So this is a nice workflow because most people's income is fairly consistent. But if I wanted to do a perfect projection for 2025, I would update every box. So wages are likely different, distributions are likely different. The warnings are our way of reminding you, like these things definitely need to be double checked. So you can review those warnings and overrides. I've already done a little bit of making some changes. So I've got my same as last year, and then I've got a base case. And we can see all the little updates that I've made. I'm gonna hide this for now. So here's my base case projection, and I've updated the wages. So I might look at someone's pay stubs and make changes. I've also updated several other things, and we're going to use this one to go ahead and just go through every section that's in here. So in the income section, we've got investment income and distributions. I zeroed out our cap gains. I increased our business income. Then we've got various schedules that I could expand or collapse different sections. And various deductions before I get to the total federal tax. And then if I kept going, we could also model state taxes for any of the states that have state income taxes. So this being my base case, we've got slightly more income, we've got more taxes. And once I have a base case that makes sense, I can just kind of copy that and run variation side by side to show A, B, C. If we made some hypothetical change, what's the net impact on the tax return? So scrolling back up to the top, I'm just going to cover 3 strategies today, but there's a lot you can do in here. You can really do anything that's on a personal tax return. And I wanted to highlight that we do have guides. So we've got guides, we've got videos, twice a week, at least, we do webinar sessions covering some of the more common strategies. Today, I'm going to show a Roth conversion. I'm going to show a SEP, retirement account contribution, and I'm going to show a charitable deduction, just to give you a taste of some of the things that you could model. So if I open up a guide, it has the steps. You can see what they look like. But again, I've already modeled some of these in advance. It's really as simple for many of them as changing one box. So in this case, I modeled a Roth conversion. I just input, here's how much of a Roth conversion we're thinking of doing. It'll show me the total tax impact of doing that Roth conversion at the bottom of this report. To pick this number, I use some of our optimization charts. So we've got 2 really useful ones. Solve for Max will help me fill a bracket. So it's going to tell me how far can I go before my effective tax rate begins to increase. What's cool about that is that it's effective rate. So it's telling me here's where the first change to your effective tax rate happens. So if it's net investment income tax, if it's a phase out of a credit or deduction, it's solving for the first change if I add ordinary income. So that's useful if I'm trying to do smaller Roth conversions. In this case, I did a larger Roth conversion. So I'm going to use a different chart we call the range calculator. And this one will actually give me a visual chart to show me the effective tax rate of every dollar. So the way to read this chart, 0 is my current income. So at 0, I already have 180K of income, and we're already in the 22% bracket. And this is a map showing if I added additional ordinary income, we just move up the x-axis, and I can see the tax impact, the total tax impact of every $1,000 by itself. So really common mistake people make is they'll fill up a marginal bracket and not understand that they could be phasing out of deductions or phasing into new taxes if they fill a bracket. So let's say I filled this 24% bracket, for example. I'm increasing my taxes, I'm crossing a bunch of the dotted lines for Medicare IRMAA cliffs, and I'm also phasing out of some of the things we see in the colored bars underneath, where some of these dollars are more expensive than other dollars. And I get these weird overlaps where that dollar is really expensive, this dollar is really inexpensive relatively. And if you don't understand that, you could easily pay more taxes than you intended to. So the way people use this tool is to do optimizations for the current tax year. So let's say my strategy for Roth conversions is I want to convert 100K every year for the next 5 years. That's my strategy, that's my game plan. But then we have the practicality of, great, but what do we actually do in 2025? Does my client actually have the tax budget to do a Roth conversion of that size? Maybe they have other things going on in their life. And we can figure out what actually happens today. So if I look at this, 100K would put us right at the end of paying this net investment income tax. We're paying as much net investment income tax as possible. So we've maxed our net investment income tax. I'll pay taxes on everything to the left of this point, where some of those dollars were costing 27.8%. So if I'm going to do 100K, might as well take advantage of some of the cheaper dollars that come next. And that's how I picked 140 right before the next spike in taxation. So you can use this to do optimizations and better understand like what's the impact today, and show A, B, C. If we do this, this, or this, here's the federal cost, here's the state cost. You can be really specific and really efficient. So that's how I would model a Roth conversion and evaluate Roth conversions. I also did an example for charity and for a self-employed retirement plan. So let's go through the charity example first. In my example, I simply just wanted to evaluate, what if we bunched multiple years of charitable contributions into a single year? I could see that would increase our itemizations. So I might show this example for 2025 and then have a scenario that shows, maybe in 2026, we take the standard deduction instead. So something like this where I can show like, hey, next year we won't have any charity. So what if we take the standard deduction in 2026? And I can show A, B, C, here's the tax impact. If we bunch multiple years worth of charity into a single year, here's how that plays out for us. Another common scenario would be with this charity, maybe instead of giving cash, maybe we give appreciated stock. And so we have some explainers that can go through, here's the benefits of doing something like a donor advised fund. If you donate appreciated stock, you're also not paying net investment income tax, and you're not paying these additional taxes. So highly recommend checking that out too. But that's as easy as it is for the charity example. You just have to show A, B, here's the net difference from one scenario to another. Which brings me to my last example before we'll move on to some of the other tax planning capabilities. This client also has a business. So they've got some pass-through business income. And we wanted to just evaluate if we maximize a self-employed retirement plan, what would be the impact of doing that? So our guide would remind you, if it's a traditional 401k, you'll go to the wages box. If it's a SEP or solo K, you're going to go to Schedule 1, and it's a Schedule 1 deduction. And then once I clicked into self-employed plans for Schedule 1, it told me here's the maximum contribution limit for that type of account. And I use that number to figure out what is the total tax impact of making that change. The delta column is one of my favorite things, but in this case, I can highlight, we do get less of a QBI deduction for maxing that retirement account, but ultimately we still come out ahead from a federal tax perspective. I've still got a couple more things to cover. There is more you can do in scenario analysis, but getting back to the tax planning, I'm going to cover some of the other things that we can do as well. So we just looked at the tax report, scenario analysis. This tax explainer is really popular to explain some of the terms that we use in tax planning. A lot of people know if they owed money, but very few people understand these terms. They don't really understand how their taxes were calculated. So this is an easy way to break down, here's what this means, here's how it works, here's what actually happened on your tax return specifically, and how we get to that bottom line of taxes owed. We do have a feature where clients can upload their own tax returns. So that is an option that you can turn on for your account. We can also support transcripts. So if you want to upload PDFs of client transcripts, you can do that. Tax letters are unique. That is really a collaboration tool. So it's designed to be used between financial advisor, client, and tax preparer. I already have one of these that I've generated, but it functions largely like a template where you can add and remove sections. And there are certain things that are frequently miscommunicated, like QCDs, for example, where if the client fails to tell the preparer that they did a charitable distribution, the preparer would think it was a taxable distribution. And so they end up paying taxes on a distribution that they shouldn't have paid taxes on. There's tons of things like that that are often miscommunicated. And so this is a really templatable way to make sure the client, the financial advisor, and the preparer are all on the same page about what happened. So people fill these out throughout the year. but typically you share it with the preparer ahead of filing season. So often January, February, people send these to preparers and make sure we're getting ahead of some of those things that could be misfiled. The Roth projection tool is one of our more popular features. So I showed in my scenario analysis how you would show the cost of a Roth conversion. This would allow you to show the lifetime benefit of a Roth conversion. So it requires quite a few inputs. You have to add in account value, Roth conversion strategy, rate of return and inflation assumptions, spending, Medicare costs, life expectancy, wages, and income. But once you've input all of that data, we can calculate, here's the income for the rest of the life expectancy of these individuals. And in this case, I've created an RMD problem where at 75, we're gonna have RMDs that continue to accelerate as we get older. And I can show if we do a Roth conversion strategy that's carefully planned, we could flatten out our distribution of income and we could stay in the lower brackets more consistently. That would represent a lifetime tax savings if we pulled it off. So over the next 25 years, we could save $1 million in taxes. It might cost us more in terms of Medicare, and I could show how the portfolio value would be different, what our break-even point would be, and our assets type over time or RMDs over time. This is a really powerful tool to show the long-term impact of a Roth conversion or a QCD strategy and how both of those can have the effect of lowering future RMDs. I think I'm almost through every feature. The last thing I'll touch on is this cash flow visualizer. It's useful to create cash flow diagrams. And so you're really creating your own diagram when we do this, but I could show the tax expense that someone has. I can get their incomes from the tax return. And if I mapped out the rest of their living expenses and discretionary expenses, I could show here's what your income and your spending look like. So that's everything for our tax planning section. I'm going to recap a little bit. The main features that people use in this are probably the tax report and scenario analysis. Really easy summary, really easy to do tax planning projections. I would say the next most popular feature we have would probably be our Roth projection tool to show the lifetime impact of Roth conversions. And all the tools are really great, but if you just showed people a few strategies for how they could reduce their lifetime taxes, most people that I work with cover what they're comfortable with covering, and then everything else they kick to like a tax professional, right? So thanks for the time today. I know we've been taking questions throughout the session, but if you want to put some additional questions in the chat, we'll answer them now. And thanks for the time. Hope you try it out with our free trial period. Just go to our website and you can sign up for a 7-day free trial where you can upload 3 tax returns to test the system. And we're excited to talk to you and help you do better tax planning. Thanks.